Very strong jewelry demand out of China and India in this third quarter of 2022. And despite very strong record quarterly net purchases by the global central banks of about 400 tons of gold, the gold price was under pressure due to weak investment demand, persistent outflows from the gold bullion ETFs in the third quarter more than erased the strong gains made earlier in the year. And this put a lot of pressure on gold. And this was despite very strong bar and coin demand, but this demand wasn't enough to offset the ETF outflows. Investors are tasked with deciding whether they want to own gold to protect against inflation and increasing geopolitical risk, or if they want to reduce this holdings because rates are rising. In the environment we're in, where rates are rising globally, and there is this outlook that inflation is set to come down, investors have preferred to own the dollar as the asset of choice. And this has propelled the dollar to 20-year highs, which has been the biggest headwind for gold in 2022. Gold has a very strong historical correlation with negative real rates being inflation adjusted rates. If inflation remains at the current levels or near the current levels, then we expect real rates to remain in negative territory, and this should be supportive of gold prices. We expect gold to continue to consolidate around these levels that we're now, around $1650, $1750 level in the near term. If the Fed pauses, if the Fed pivots, that's clearly a strong catalyst for gold. But we think there is opportunity for gold to rally from here, even ahead of a Fed pause, as the market anticipates the end of the rate hikes, or as the market prices in an environment where the Fed is no longer in control of inflation. The recent gold price action following the last CPI report for October here in the US is a perfect example of how expectations of a Fed pivot getting priced in can be very beneficial for gold. The gold price broke out of it, the recent downward trend, and traded up well above $1,700 per ounce. And it now looks like it may be back on the longer term bullish trend that it has been in since 2016.